All right. I'd like to welcome everyone to the last panel session of day one here at BAFT, New Frontiers in Payments. My name is Kalyani Bhatia. I run a global payments go-to-market expert team at Swift, and I'm glad to be your moderator today. And honestly, I need to talk to my booking agent because I always get before lunch or after lunch. So I don't know why that is, but here we are. But it's okay. We have a great panel for you today who's going to guide us on our journey through the new frontier of payments. It's a diverse panel. If I think of geographically, function that they represent in the financial ecosystem, you're going to get a wide range of perspectives on this new frontier that we're going to explore. So let me go ahead and introduce them. So on the far end, I have Richard Zena, Senior Vice President, and among other things, responsible for chips at the Clearinghouse. I have Matt Luce, Senior Vice President, Head of Wires and Clearing Product Management at Wells Fargo. And then I have Colleen Ostrovsky, Senior Vice President, Treasurer and General Manager of Treasury as a Service at Visa. And finally, we have Martin Masiak, Head of U.S. Client Relationships, Financial Institutions at Bank of China. So welcome, panel. Great to have you here. So quick reminder to our audience, get onto Slido, code BAFT, and ask your questions, and we'll try to find some time at the end to ask those questions of our panel. Before we start, and we start talking about looking into the future and talking about what the new frontier looks like, I wanted to take a look in the rearview mirror and describe how we got here. And we're not going to go too far. We're going to go about 3 years and talk about what the world looked like then. So we had a pandemic. We digitized everything, accelerated by that pandemic. We had geopolitical changes. We had inflation. We had rising energy costs. Everything impacted everyone. At the same time, the financial ecosystem was also evolving. We had new entrants, new tech, new innovation. And customer expectations are higher than ever. Even Ariana Grande and her 7 Ring song. Okay, now I know I got everybody's attention, and you're going to see how I'm going to work this in. But the song came out around the same time. And if you remember from the lyrics, she says, I see it, I like it, I want it, I got it. If that doesn't articulate customer experience today, I don't know what will. And you're welcome. You're going to think of that song and this panel for the rest of the night. So I've done our job. Excellent. All of these factors have contributed to increasing fragmentation, closed loops, digital islands. Building inclusive digital economies has become more important than ever. Without rapid and frictionless value flows, coupled with new tech, new innovation, new standards, and financial literacy programs, the gap to reach the underbanked is going to increase. We've also seen a proliferation of instant payment systems around the world. And no doubt, interconnectivity and interoperability between traditional, instant, and emerging payment systems is key. But as we've seen more and more convergent projects pop up, there's still challenges that we need to address. Things like standardization, governance, ownership, operating hours, data privacy, and fraud concerns. Our panel is going to talk about technology and the role it plays in the new future. So far, it's been a double-edged sword. On one hand, it's facilitated fragmentation in payment systems. And on the other, it has enabled, through cloud and the rise of APIs, the financial sector to offer its services to more people, more businesses, in more locations. And finally, at Swift, we really strongly believe that collaboration is key in order to navigate the bumps and the potholes of the new frontier. If we were to overcome fragmentation, achieve our collective goal of an instant and frictionless future. We all agree interoperability is key. It's essential, whether it's interlinking market infrastructures or launching CBDCs. We're at a pivotal moment for the global payment industry, and we recognize that there is strength in our numbers. Standardization, led by the global adoption of ISO 22, will be essential to achieve interoperability between systems and infrastructures. We see a future powered on rich data, artificial intelligence, APIs, cloud-based solutions that are going to bring us new and exciting customer experiences. And in the end, isn't it just simply ensuring all forms and methods of regulated value exchange can seamlessly move across borders to maximize economic inclusivity and opportunity? All right, panel. So now it's your turn. Let's begin our journey into the new frontier and set the scene. You all come from very different players in the ecosystem, and I'm curious to know, from your institution's perspective, What do you believe will have the most significant impact shaping the future of global payments, and how do these areas, how will they evolve for you? So, Richard, let's start with you.
Kalyani, you so elegantly framed the landscape. I'm tempted to call it a wrap here.
Yeah.
Although we don't have all the Ariana Grande, supplements. But I will suggest the advent of new technologies and new entrants in payments will prove utterly transformative. Formerly, payments were the caboose of the financial and economic train and a sleepy backwater. No longer. Payments increasingly are the driver for customer value and a means to differentiate services. Now, admittedly, I approach this subject from the perspective of the clearinghouse, a 170-year-old payment market infrastructure, AKA the original fintech. Now, when one reflects upon a 170-year-old history, one can think either old, stodgy, or perhaps able to respond with the times and maintain relevance and continue to deliver value from the age of the telegraph to today. Needless to say, we prefer the latter interpretation. Now, recognizing that a world increasingly of 24/7 commerce compels a 24/7 payment system, we launched the Real-Time Payment Network in 2017, which I will suggest was the first payment rail in the United States in over a generation. Meanwhile, with respect to the spotlight, the gauntlet that new technologies have placed on cross-border and off-hours use cases, I will suggest that 24/7 is the next big wave that we really look to once we get ISO standardization in the rearview mirror. Some of you may recall that we extended the operating hours of chips by an hour from 5 to 6 p.m. In 2021. I will suggest that that was just a tactical step in support of a larger strategic ambition to operate chips 24/7. The next big step in that trajectory, we believe, will be a Sunday operating session for chips. The business rationale to open up access to new markets, especially the Middle East, to enhance the competitive posture of our participants and the network, to support the dollar as a global reserve and settlement currency, and the guidance that we've received from our business committee and our clearinghouse leadership is to move to the Sunday operating session just as soon as practicable once ISO is in the rearview mirror. We'll suggest that the move to message standardization through ISO, which we'll elaborate on in just a moment, plus extended hours, absolutely relevant for BAFT, given the focus on global finance and trade, and given the import of chips to the global financial market infrastructure. Meanwhile, continuing with the cross-border theme, we'll suggest that the efforts to link instant payment networks across jurisdictions is very much the next wave with respect to instant payments, such that we can realize a future that is not merely cross-border, but also cross-currency. These are domains in which collectively, I know we don't merely want to respond, but absolutely to lead. Competition is a great thing.
Terrific. No, thank you very much for that last piece. We get that question a lot right now on what's happening with IXB. So, Colleen, what about from Visa?
Yeah, well, I think building on a lot of what Richard said and what you said in your opening remarks, right? Real-time payments are just accelerating tremendously. We're expecting 600% growth between 2020 and 2025 in the US alone. We're in the middle of that journey and well on the way. I think we'll exceed those metrics. And as you said, competition is great. It's pushing all tides higher, and we think that there's a real opportunity. Given my role as treasurer and with Treasury as a Service, I think a real opportunity in real-time payments is cross-border. All of us know cross-border money movement still suffers from a lot of pain points around cost, speed, transparency. And I think as innovation continues to improve, and as we see the push from fintechs and others, and this first fintech over here, we're going to see those pain points addressed more fulsomely.
Okay, and now let's end with our banks. Matt, why don't you go ahead and start for Wells Fargo?
Yeah, sure. I mean, I think kind of summing it up from my perspective, if you look at interoperability of pay types is going to be super critical, whether it's real-time payments, the future of CBDCs or whatever is next, wallets. But I also think it's just the overarching, we kind of heard it in the previous session around the fraud challenges and other things, the ability to securely share data, which is really what payments is at its heart anyway. Off the back of that sharing of data, obviously transactions move, cash moves, but the ability to do that in different and new ways with different opportunities, and that interconnectivity is going to be critical to that. And it's going to be not about, does the customer want real-time payments? Does the customer want a wire? Does the customer want an ACH? Does the customer want a wallet transaction? It's going to be creating the flexibility of the customer doesn't really care what the underlying rail is. Most of us in this room do because that's what we do for a living, and that's where we spend our time focusing on, I've got to build wire capabilities, I've got to build real-time payment capabilities. The fintechs have gotten very good at kind of flipping that script and saying, well, we're just going to build a capability and underneath it use various payment methods. And so to me, that is really our focus, getting away from the payment method as how we pitch to clients, but getting back to the basics of, well, what do you need from that transaction? Do you need instant settlement? Do you need finality? Do you need transparency? Do you just need efficiency? And then leveraging the capabilities we build and building that interconnectivity behind the scenes to create whatever experience that client needs up front. And so it's kind of just starting to change. We heard earlier today as well, as we're becoming much more client and customer focused, change the focus to the client and kind of take the complexity away from the back office, because the reality is it's just going to get more complex. Right? 10 years from now, we'll be sitting and there'll be even 10 other new ways that none of us even dreamed of making payments. I thought a payment and it happened and my coffee's paid for and I don't have to talk to anybody. I don't have to tap anything. I just said, here you go, I want a large coffee, and it comes my way.
Heaven forbid. We need you tapping.
Great, Martin, lots of talk in the news about RMB. What's happening with Bank of China?
Well, first of all, thank you for having us on this panel. And I do want to make a disclosure that whatever I say is my view, not view of the Bank of China. So again, I will focus on RMB and its impact on global payments because we do see as a bank here in the US that there's still a bit of a new frontier as an RMB for currency. My view, the view of the House sometimes is that the latest RMB US dollar exchange rate will probably fluctuate between 6.85 to 6.9 for this year. Last year, we did see a big spike of clients interested in RMB when RMB was cheaper. It depreciated against US dollars when the FX was around 7 and above that. As a result of that, we witnessed a spike in FX volumes in CNH, as well as in trade activities, and also greater impact and greater market interest in clearing and just RMB as a whole, which was quite good for us as a Chinese bank. Some examples include standby letter of credits for our corporate clients. There was also a lot of interest for RMB structuring, LC discounting for commodity companies. Also witnessed activities for trade finance companies, trade finance support for Chinese corporates, as well as insurance companies from China and the US. So definitely a lot of interest last year in RMB. And another topic that comes up all the time is for the audience is the liquidity. How do you get RMB in the States? So what's interesting to see is that the RMB, the CNH, the offshore RMB, is quite liquid in the US. For example, the top economies using the FX spot transactions is actually UK with about 36%. US is second with 14%. So there's definitely a liquidity in CNH in the US. And offshore RMB, CNH, which I mentioned, is very significant FX product in the US. And I think most of the big banks in the States actually market CNH in some form or shape. So definitely a lot more activity. The CNH spot, the CNH forward, swaps can be traded online through a interbank trading software. However, large trades and swaps are often could be done through voice, which means that a lot of clients don't need to onboard any trading software to get started trading with CNH. All you have to do is pick up the phone. So that's a really good news in the US because it makes things a little bit easier. BOC USA, it is an RMB liquidity provider in the US, and we provide pretty much try to provide competitive pricing. But RMB liquidity and pricing is very closely associated with our ability to access it from China and from our affiliates from Hong Kong. And liquidity, usually in the US, it's best during the New York morning hours because it overlaps between New York and London as well. And again, it's probably often seen as the primary liquidity market for all of the FX, not just RMB. Price spreads generally will widen during the New York afternoon hours because of the tighter liquidity. Do you have time to say a couple more things?
Couple more things.
Couple more things. I just want us also to share with you some of the stats because we want to share with you what we are seeing in the market. So the RMB as a global currency in trade finance actually ranked number 3, 4.6% as of Q1 of this year. And RMB share as a global payment currency is ranked number 5, which is only 2%. So again, it's still quite small. What's different is the last year we witnessed the total cross-border RMB remittance for trade was around $1.2 trillion US, which is a big number, a year-over-year increase of about 37%. So in our view, you would definitely see a lot more RMB, and I think that's going to be the future.
Okay, so we've set the scene of our new frontier for the audience. I want to pivot and talk about technology, which is becoming more and more prominent as we talk about the future. So I'd love to hear, what technologies do you think will be the most transformative for the future of payments? And Matt, I'm going to start with you this time.
Yeah, I think getting back to my theme of data sharing, to me, I mean, obviously you've got APIs and artificial intelligence and all the standard, but I want to focus on something that's not discussed as much, which is private enhancing technology, which allows you to share data in a very secure way with actually not sharing all the data, which is our biggest challenge as an industry with whether it's pre-validation, fraud checking, or whatever it may be. We all have the data that we could tell each other to say that's a bad account, that's a good account, or I didn't realize that may be a bad account, let me look into it. But we all struggle with trying to share that data because of privacy concerns and other factors from a regulatory perspective. But there's technology now that's becoming a little bit more mainstream, which allows you to share that data with actually never really sharing the data. Encrypting it in such a way, asking questions and getting responses, but you're never actually sharing very secure date of birth type information. And I think that's going to be very critical as the cross-border spaces. We try to remove all the friction and increase the speed. The real challenge always is all those things in between that actually cause most of the friction and slow down the transactions. If we knew up front that the two parties involved in that transaction were both legitimate and good parties, well, now the transaction, even today, actually happens quite quickly, right, and straight through. And so how do we move that? I always call it moving it to the left. How do we do more up front? How do we do that? And I think private enhancing technology, the ability for all of us in this room in a few years to be able to share data in a very secure and meaningful way to enhance the experience on both ends of the transaction is going to be something that's really going to be a game changer.
Okay, Colleen, anything that you'd like to add for that?
Well, it pains me to say this, but I think treasury services historically have been kind of an obscure part of financial services. However, in the last couple of years, I think we could agree that treasury is becoming more of a center of innovation and really helping move treasury from the margins to the mainstream. At Visa, we're using, between Currency Cloud and Treasury as a Service, we have these modular building blocks that we deliver via API to improve banks' ability to create cross-border solutions that really delight the customer. One thing that we have is real-time FX, right? So your consumer or your customer who's traveling abroad and buying a cup of coffee in sterling in London, they can get an alert on their mobile device that tells them exactly what that cost them in their home currency. So the bank's delivering it via a solution that we provide. Another such example is multi-currency wallets. So someone is going on their world tour and they're going to go and spend euros and sterling and South African rand, whatever kind of currency. They can preload a wallet with those currencies at a rate that they know, right? So they have transparency in that rate, they have cost certainty, they can set themselves a budget, et cetera. So these are the innovations that I think we're seeing in technology that address some of those pain points in cross-border, and again, are providing really customer experiences that are expected.
Yeah, and I agree that, I mean, the smartphone, if you think what it's done for emerging markets, and people have been able to leapfrog straight into digital wallets without even having a bank account, so that's tremendous. Richard, what about the clearinghouse?
So the flip side of harnessing that data, I will suggest, is the standardization of payment message formats so that the value can be gleaned appropriately. And I will suggest that with respect to the global harmonization of payment message standards in accordance with the ISO 20022 message standard, we are on the cusp of something very profound, especially in the capacity to standardize up and down the payment chain and across jurisdictions, in enhancing efficiency in straight-through processing, in access to enriched data, in querying around structured message formats, in innovation around a common message suite that may take us to value propositions that we can't even anticipate ex ante. As most of you know, the implementation of CHIPS ISO is now scheduled for April 2024. As someone famously quipped, that is not the end, not even the beginning of the end, but perhaps the end of the beginning. We will have substantial work to continue to integrate ISO in order to glean those values, but we are on the cusp of something very profound and very meaningful. I will suggest also the interest to standardize message formats globally definitely supports the cross-border interests and aspirations that collectively we have. I will also suggest that when it comes to payments, the transfer of value, the settlement, may actually be the easier component. The management, the stewardship, the care of the information content accompanying the message may pose the greater challenge. And to that end, we think that ISO is a potential solution and an ongoing comparative advantage. Kalyani, want to congratulate SWIFT and your colleagues in the very successful implementation of cross-border payment messages in March with Australia, Europe, Canada, and others. May your success lay the foundation for our success.
Oh, Richard, you're talking my love language now. All right, so we've talked about the horizon of the new frontier, the challenges and pitfalls, and how tech is going to help us. But now let's talk about collaboration. So how can we reach our vision together to create this instant and frictionless world of payments? And what are those specific strategies and initiatives that we need to be focused on? And Martin, I'm going to actually start with you. Okay. US and China, what can we do?
Well, I think first we have to educate our clients about what are the challenges of using the RMB. I think you probably have seen in the past that some of the corporates here, because everyone's here is pretty much from the FI side, your clients may have witnessed where the invoicing in the RMB payments was rejected by the Chinese supplier or exporter. And that's probably because, this is, again, my personal view, is that those clients in China probably don't have access to any other currency except RMB. So if they do get a chance to get foreign currency like US dollars, they would definitely want to tap into that and use the advantage. The other point about challenge is that last year, because of RMB depreciation, of course, as a Chinese exporter importer, you prefer to get foreign currency. So those items can definitely, I would say, pollute some of the RMB internationalization as a cross-border payment. Of course, the other item is the actual trading hours. I think right now for the onshore CNY, the trading hours in the U.S. in New York is from 9 a.m. to 3 p.m. So you still have that couple-hour gap if clients want to obviously trade CNY after 3 p.m. But the story is much better, of course, for CNH, which is the offshore RMB, where now it's pretty much 5 days a week, 24/7, and the cutoff time on Friday is 5 p.m. So that's a good thing. We also like to ask our clients, right? What and teach them what are the benefits of RMB. And I think if you are a corporate client, we ask the following 3 questions ultimately, and I'll be very quick, I promise. Is that number one, are you operating in China, right? If you are operating in China, then it does create FX cost savings for you, right? And also simplifies the FX admin process for you. I mean, if you are a small company or mid-sized company, any savings would definitely hit your bottom line, and it will be beneficial for you. It's also a natural hedge for payables and receivables. It's also a natural hedge for payables and receivables if a foreign investment company have capital injected into China. So that's one question. The other one is, are you trading in China? Again, it does improve. If you do use RMB, we do see that it does improve your supplier buyers business development because you are transacting in the same currency. It is cheaper. We do see more transparent pricing. You do also have a stronger negotiation power, and we also see a potential discounting in invoicing. 5 years ago, that number was around 4%. Now it's a little bit less, but again, any invoicing discounting that you can get, is definitely beneficial for you. Another big point is it does widen your supplier client base, right? Not every Chinese company can accept foreign currency, so it definitely gives you more access to more clients if you do it in RMB. And again, any company that have financing needs and management needs in RMB, any excess RMB cash can be invested into offshore products like the Bank Connect, Stock Connect, QFI, CIBNM. So it will not go into waste. And also in the US, because BOC is a clearing bank, we can also do both deposits and loans in RMB. And again, the scope of the cross-border business, there's pretty much all the products you can think of, deposits, investments, FX. We can obviously educate clients about where to invest in China. But I think, I want to mention as well here the benefits of as a clearing bank in the US. I think the biggest few items as a clearing bank here in the States is that, we do provide RMB liquidity to you in both CNH and CNY. We also do have a 24-hour, 5 days a week customer service. So if your client ever needs or there's any blockage in the payments, or the payments is not getting in time, again, you do have on the same time zone, support services on the ground. And again, the biggest factor is understanding the compliance, right? Because the U.S. compliance different from the Chinese compliance. So having a clearing bank in the States that can give you understanding on compliance on both sides, it just makes things easier.
Okay, thank you. Matt.
Yeah, I'm going to also hopefully try to answer the second question here. We've done ISO. Obviously, we're early days. We're still migrating some other systems, but we have yet to tap into the opportunities that ISO brings with structured data and other things. So to me, that's the next frontier in the probably next couple of years of really figuring out, all right, now that we have ISO, we've got ISO somewhat consistent in multiple markets, how do we actually take advantage of those structured fields and actually start implementing some real value from ISO? We would all argue, and here's the question in the room as well, that just like-for-like movement from one to the other does not give you any value. But the opportunities ISO brings from the ability to do structured data, do things in different ways, should bring massive value, and is one of the main reasons why we all agreed we should move as an industry towards ISO. So now we need to really think about We knew we couldn't really do that in parallel and scare everybody with you've got to convert ISO and then you've got to get to mandatory structure as well. But now I think we need to have a real honest conversation of how we start mandating. The only way you're going to get the true value end-to-end industry-wide is actually start mandating some of the structure that ISO can bring and really start taking advantage of the new opportunities ISO can bring and looking at very direct use cases and how we mandate that for those use cases in specific ways, whether it's trade, whether it's other things, so that we can see the value and start showing that return and that value and start automating some extremely manual processes that we all do in the back office today that are actually causing most of the delays in transactions and payments. So I think it's time to now start having real honest discussions around, we're live in a majority of the world in ISO. Over the next 2 years, we will be live in almost every market in some form of ISO. Okay, what's next? How do we get some structure? How do we bring some real value in that ISO migration? And it's never too soon to start really talking about that and getting people prepared for mandating things that right now might seem quite difficult, but that are going to be necessary for us all to take advantage of the value it brings.
Great. So maybe I'll provide a little bit of an update on this particular question as well. So we're developing with Ernst & Young a rich data ebook that's coming out in June. There are 15 use cases, some that are focused on run the bank, operational efficiencies, standardization, some on grow your bank, so revenue streams, and some for corporates. So there are 15 use cases. We're in kind of client consultation, interviewing, trying to put metrics together right now. 5 of those use cases will come out in June. So I would keep a watch out there, so that would answer some of those questions as well. So just to close this question out, Colleen.
So Visa's been on this journey on instant and frictionless payments for some time. We really aim to create a comprehensive set of solutions for banks to provide. A lot has been said this morning about security and fraud. Those are a couple of the value-added services we're focused on to help provide these secure and frictionless payment opportunities for the end user and experiences. I mentioned Treasury as a Service, that we're aiming to really address the pain points on cross-border payments around cost, transparency, speed, access. But we also have been addressing interoperability, which is another topic that a lot has been said about. Recently, Visa announced Visa Plus, which is aimed to really bridge the interoperability gaps around P2P payments. So with Visa Plus, any consumer can send and receive payments between participating apps seamlessly. And so again, this is a great leap forward, I think, for that end user experience and making it more seamless and secure.
Great. So why don't we, just to close out this new frontier, the last thing I want to look at is, let's look out a little bit farther into the future. And I know there is a panel tomorrow on transaction banking in 2050, so we're not going to go out that far. Let's go about 10 years. And by then, we would have passed the G20 deadline on expectations around cross-border payments. So, panel, how did we do? What does global payments look like? And what can customers expect? Would someone like to start? We threw them a curveball.
Okay, so I'm going to suggest over that 10-year horizon that you framed, Kalyani, that we're going to solve the cross-border challenge, and we're going to solve the off-hours challenge. I do want to underscore 2 themes that I think will never change. One is the focus on resiliency and security, which is the anchor and foundation for all else, especially given the escalating threat environment. So that's something I do not think will change. The other is the focus and import of liquidity savings, which I think will be relevant in the foreseeable future, especially given the recent interest rate environment in which we have entered. And I'm going to suggest that the focus on liquidity savings is going to be very, very prominent going forward and will not change.
Okay.
Maybe I can go next. I mean, I think it's, kind of leading on that as well. I think we'll be leveraging a variety of new technologies to create a much more seamless experience end-to-end for clients of all different shapes and sizes for cross-border transactions. And I think that experience is going to be very, very similar to what we see probably on the domestic side from a cross-border side. We say that quite often, but I think within 10 years, we're going to get pretty close. I think we're inching there way by way. We've talked about all kind of the building blocks to get us there, from ISO to leveraging new technology. I think the tokenization of assets, inclusive of cash, is going to give you that ability to instantly move things across different parties and then move it again instantly. And that should lead into then, as we talk about it, there's always going to be the need for foreign exchange and all these other services on top of that. How do we then just build that into that infrastructure, into that token, and allow that to happen in a much more automated fashion and 24/7? So we pretty much, sadly, are closing in. I don't know what a work life looks like in a fully payments 24/7, because you can't be on any more than we are now with our smart devices. But we're going to be in a fully global 24/7, right? A business day is just going to flip over, right? It's going to be right now at some point in the world, every 5 minutes, it's a new business day somewhere else, or every hour. And that's just the world we're going to be living in, and there are going to be payments happening all the time. There's going to be the need, right, to have back offices, corporate treasury groups, depending on where they are located around the world, be prepared for that. And so I think we're going to leverage all those technologies we talked about, the foundation of ISO, to create this seamless experience. And my gut is there will probably be, within 10 years, a technology we have not talked about today, that we can't even imagine, that will exist, that will tweak one or multiple of those things and make it even more efficient and more connected.
Colleen?
I have a hard time thinking 10 months ahead, let alone 10 years ahead, to be honest. But I do think a lot of what you've said resonates. I think everyone wants commercial, wholesale, everything else to look a lot like what we're already able to do in our consumer lives today, right? And so in 10 years' time, will we have instant, frictionless, cross-border, cross-currency payments? I hope so, right? I think in 10 years' time it could be doable. I think, coming back to Treasury, my initial love, we really think that there'll be continued automation in Treasury operations. And so to your point, it will have to be 24/7, but with automation, it'll free up treasurers and treasury organizations and treasury services to really focus on how to use the balance sheet to help the business grow, to points Chris made this morning in our first session. I think that'll be a great benefit. In 10 years' time, it'll be really transformed, I believe, in what Treasury will be doing in this infrastructure. And then finally, I think fintechs will continue to be a really important part of the ecosystem and continue to push innovation forward.
Great. Martin?
So I want to stick with the R&B topic, if you don't mind. I think it's going to be less exotic, less of a frontier. I think you're probably going to see a lot more FIs marketing R&B going forward, as we see countries like Saudi, Brazil, Argentina adopting R&B for payments and for trade. And that's already happening. And pretty much, if you look at the RMB as a currency for investment, it's already pretty frequently used, especially with the U.S. asset managers. I think there's also, hopefully, there'll be less of the misconception about the currency. You've probably heard in the past about the trapped cash situation, companies sending money to China and then you cannot move the money out. I think we have to separate the capital requirements from the cross-border payments, because I think the payments work quite well, as long as the sender and the receiver follows the instructions. And again, I think in the past we are seeing a lot more positive, favorable policy updates on RMB usage. The numbers are quite optimistic these days in trade. So I think bit by bit you will see a lot more of RMB, and I'm hoping that it's just going to become another currency and not something exotic that we think it is in the U.S.
All right. So before I let you go, I do have a game I want to play with you that I love to end with, what's hot in payments right now. But let's see if we can answer a couple of these questions. Richard, there's one, what is happening with IXP? So I think you talked a little bit about it,
Sure.
but we didn't call it IXP.
So IXP stands for the Instant Cross-Border Collaboration between the clearinghouse, EBA Clearing, and SWIFT to support the linkage of instant payment networks, namely in the prototype RTP here in the US and RT1 in Europe. A technical model has been established and successfully validated We have been working to progress that technical model to a pilot. We are currently going through some legal machinations in order to go to the live pilot mode. But notwithstanding those legal challenges, the technical scheme we think has been validated. Affirming that, we've had a lot of interest in IXB from other jurisdictions, namely the UK, Canada, Australia, and Singapore. And we continue in dialogue with some of those other jurisdictions. We think there's great promise here still, and look forward to getting some of those legal challenges in the rearview mirror and to roll out some actual pilot programs.
Great. And I think the other one I want to cover is this question about how can are we behind Asia and EMEA? The US is very fragmented. We can't agree on anything. So do we need regulation? Do we need mandates? What do we need?
I think we just need a little bit more time, to be honest. We seem to always, sadly, right, I spent a few years in the UK, and until you leave the US, you don't really realize how far behind we are on some of these technologies. You know, for us, obviously it's a complex infrastructure and market, right? Richard, you know, in your career, right, with a lot of banks, right, with different priorities. And so trying to bring everybody together for one seamless look, I think having multiple payment rails on RTP in the end will be a good thing, because it will create some of that competition and optionality that the market needs. I think we just now need time for it to get mature, and we need to start, you know, leveraging use cases for some of these to be real. I think we're usually a little hesitant to kind of dive in head first as an industry, and so we always kind of dip our toe in the water a little bit. Let's see how things play out. But I think we're really at that precipice for real change, post-pandemic, post-new technologies, post-new payment types. There's going to be real meaningful change, and I'm hopeful that the US will not just continue to be kind of fast or maybe slow followers to the rest of the world, and at some point we're kind of leapfrog and jump over some of the other countries and show how we can do things in different ways as well to be collaborative. And that's the key piece here. Right? And I think, Richard, when you talk IXB as well, we've talked a lot about technology, we've talked a lot about collaboration. We kind of overlook the harder pieces, which sadly are legal, governance, regulatory, that is not going away for the right reasons. And there's a lot of reasons why we have that in our space, because the security and safety and soundness of the transactions is number one. So we can't forget that. But I think we can still leverage that to do things better and more efficiently. And so I'm very hopeful, right, that we're going to get there. Right? At some point, we won't be seen as the laggard in the global space.
So glass half full.
Glass is
good.
Half full.
Half full. Okay. All right. Really quickly, I want to play my little game. So this is my litmus test to figure out if what the big trends are that are happening in payments right now are really hot or they're really not. So this is going to be really quick, just whatever you feel like answering. First one, I just have a few topics. Artificial intelligence. Clearly very hot. Did you know that this week 200 AI tools were released? So who's playing with ChatGPT up here? Good. Good to hear. Speaking of new frontiers, the metaverse, have you ventured inside?
No. I can't wrap my head around that one.
I can say no.
Doesn't seem safe.
At your institution, are you fully remote work, hybrid, or 100% on-site?
Hybrid.
Hybrid.
Hybrid, good. Given all the news in the crypto space lately, is crypto dead?
No.
No.
Nope.
Biometrics, anyone paid with anything via smile, voice, iris, fingerprints? Let's put Apple to the side for the moment.
No.
No, okay.
I boarded a plane using my face.
Yeah, definitely board planes using our
This was
eyes.
interesting.
And
It didn't work very well.
And voice.
Voice recognition as your password over the phone.
Okay, and last one, Internet of Things payments outside of your phone. Have you paid using another device, not your watch? I'm talking about fridges, cars, things like that.
No.
Not yet,
No.
but I'm very
Okay.
excited to.
All right. Thank you, panel, for this great discussion. Thank you, audience. And I'm going to turn it back over to Todd to close us out.